YouTube. So this is the first video on the options channel, and I'm super excited to get started on this channel. This is going to be where I'm just documenting my options journey. I've been already into options for some time now. I've been into stocks for some time now, but I really wanted to start documenting this whole journey because I'm not an expert of any sorts. I'm someone that has seen some successful options, has still had have a long way to go with options, a lot of things to learn, but I do have a decent amount of understanding. I'm not an expert, I'm not a pro, I'm just, I, I'm trying to get there though. So I'm excited to document this journey. I feel like my belief is that anyone should be getting into the stock market because it's so simple. If you have a phone and if you're 18 or even if you're younger, your parents can open up you a stock portfolio. You don't have to sign no paperwork or ask nobody permission. You can go and invest. And so my idea with this is that I'm a barber, right? So most of my income is generated behind the chair. Plenty of you who are going to be tuning in, you have a job, you have a trade, you have some type of skill where you make most of your income. And you know what they say, you need to have multiple streams of income to really build wealth. Well, I feel like options is something that's going to be able to give us all income boost, and it's going to be another stream for us to truly build that wealth. But before you get into this options channel, before you go along with this journey with me, I want to give a heads up. You should Options is extremely volatile and extremely risky. I want you to already have established your savings goals and stuff like that. Your main source of income, whether that's your job or your business or whatever you do. And then I want you to have an understanding of long term investing before you get started into options, whether that's either dollar cost averaging or just buying into certain companies and not selling the shares and seeing it as an investment for the long term. Now, you're not trying to take any income from those portfolios or of the sorts. You're trying to let that build and become a wealth multiplier. So when you get older, the compound on those investments is starting to really kill for you. Now, then I want you to come tune into the options channel. And this is where we're going to be trying to make some extra income. We're trying to boost our income out of this. This is something that I would advise you to want to grow your options account to whatever number suits you. But there will be time when you might want to just pull some money from your options account, and that's okay too. So for the average person, we all are busy. I, my goal is let's get in. Actually, let's go ahead and get into the goals for this channel. So the first one is to really master this game, but I also want to document that journey. Like I said, I have an understanding, but it's still a long ways to go. And honestly, you can't know it all. So I never feel like I figured this game out. I have some understanding, but I'm not to the point where I'm making what I want to make at the market in my options account yet. So I think this journey is something that I will be pursuing for the rest of my life, basically. Even if I am making good money, but it's still going to be a lot to learn. And also, goal number two is I want to make the everyday person some resourceful income. Like I said, we're all busy. We don't have time to just be in the stock market all day and look at charts all day and be day traders and all that. My philosophy right now, it could change. I could maybe do day trades or anything like some stuff like that, but right now I'm mainly a swing trader, and I do leap trades as well on my options plays, and we'll get into that next. And I want to just keep it simple. I want to show you guys what I'm getting into, what I've got into for the week, because I want to drop on every Sunday, just giving an update of what I'm looking for, what I've done, and um, how I'm executing. And maybe you guys can tag along the journey, and maybe you guys can make some money right alongside me. But I want to keep it simple. Like I said, most of my days are behind the chair, so I don't have the time to be just staring at screens all day, researching plays all day and companies all day. But I want to keep an efficient and simple system when it comes to making money out of this market. So those are my main goals with this YouTube channel. So let's go ahead, and of course, I gotta give you guys the disclaimer. So this content is for educational and informational purposes only. It should not be considered financial advice. I'm not a licensed financial advisor. Always do your own research and consult with a qualified financial professional before making investment decisions. Okay, so now we're about to get into some of the plays that I'm currently in. So my outlook for this channel is I basically want to show you guys, like I said, what I'm doing. So since this is the first video, of course it's going to be something some of you guys don't know. Some of you guys might be here with me and have a good understanding. But what I like to do is I like to do the wheel strategy, and I like to also buy calls. So right now, why does it look like that on my screen? I'm sorry. Let me see why. Why does my backdrop look like that? This should be buy right here. Just I'm not sure why that's blurred out, but that should be say buy. This is the first one, so we're gonna might have some technical difficulties. But so yes, I like to buy calls and I like to do the wheel strategy, which starts out with selling puts. So this is my E-Trade account at the top with the plays that I'm currently in. Currently, I'm going to talk about the three at the bottom. The two puts I sold is on Sky and Five, and the call I bought Friday was on Meta. So what you guys can see is basically that. Let me zoom back in. Okay, so right here you can see that I sold and I sold puts. These are the dates that I entered and these are the days they expire. So currently it's May 10th. That date on my iPad is wrong. I got to figure out why that is, but it's currently May 10th. So we have till Friday to get out of either take profit on these plays or I might get assigned, and I'll show you guys what that looks like. And we also bought a call right here, a call on Meta, and we all know who Meta is. So, and that's a little different from selling puts, and I'll show you guys. And so this is what it looks like in my E-Trade. I sold a put for a $220 strike for 5 below, and then I sold a put on Sky May 15th strike, 75 May 15th expiration, $75 strike. And you see I'm down big on that one. So actually let's start with the worst one. Let's get into the charts now. So this is the chart for Sky. I want to show you the two puts I sold, and then I'll show you guys the call on Meta. So basically, when I got in on what was the date, guys? I got into this call on Sky on 4/22. So let's go back to that and see that it was 4/22 on this date. So Sky was up here when I got into this I sold this put. And when you're selling a put, you're selling basically insurance to someone who owns the stock. You're saying that if for me, I was saying that if it falls below this yellow line, the $75 line is not exact. It's at 74.97, but if it falls below that yellow line, I will take on these shares. So meaning that if this stock was to fall all the way uh to 66.41 right there, after or be on May 15th, my expiration date, I would have to take on those shares from them. And I actually get a premium once I sell them this put to take on this risk. And say if it doesn't fall below this yellow line by May 15th, I will get to keep that premium free and clear. So either two things can happen. I can be assigned the shares and I can begin to sell calls on it, or the stock can expire above the strike price and I can keep my premium and I can get into my next play. Ideally, I like to just not be assigned and keep the premium, but potentially we could be assigned and we will start beginning our wheel strategy, which we'll get into a little later on other videos. But I kind of wanted to show you guys, like for this first one, so we can get a flow of how, a feel of how these videos are going to flow. Because I plan on dropping every Sunday. And like I said, I'm going to show you these things. And I don't want it to be long. Like I said, I want to keep it simple. And so what I seen was that when I enter into this play, and when we were here, actually, let me add that as a favorite. Let me add that horizontal ray, that vertical ray as a favorite. Where is it at? That vertical line. Let's add that as a favorite. So we got into it one more time, guys. My bad. We got into that play on 422. So let's put that vertical ray at 422 just so we can see the date that we got into it. Okay. So the blue line is the day we entered that play. And what I seen, this gray line at the bottom, I seen strong support at this line. And so I felt like no matter what, at this $75 strike, I would be willing to take on these shares because I feel like this is strong support right here. Also, I had a feeling that it was breaking above with strong volume right here, that 200-day moving average. And my sorry guys, my 200-day moving average is the green line. I have the 400-day as well on there as the blue line, and the 50-day as the purple line. And one thing that I will say about this play that it's a couple places I went wrong on this play, right? We still have some time. It's under our strike, and we still have till Friday for it to bounce off this support. But a couple places I went wrong is the first one is that we sold a put. Of course, we respected the 200-day, but it didn't really give us enough confirmation above this 200-day for us to really respect that it was going to hold it up. Like here, it came up, but it fell right back down, and it came up with heavy volume, but it really didn't hold it up for that much long, and it went right back away with strong selling pressure. So I kind of didn't let it fully respect that 200-day moving average. Also, it's still under this is 400-day moving average. So that was one area I messed up. Another thing is where I messed up is that the spread on this stock is crazy. The spread on this stock is crazy. So it says that I'm down 157%, it's because the spread is so wide that I might can actually get out at a lower price point. Like the bid prices might be a little bit closer to where I purchased it at, but the spread is so wide. The median price between those two is about 288, making me not even really able to exit this play right now at a decent strike. So that's where I went wrong, and that's why I really like to document this journey and why I'm going to document this journey. But let's move on to the next one, the put we sold on 5 and why we kind of got into it. So on 5, I believe that it was respecting its trend line. 5 and below is the company. I liked how it was really respecting this 50-day moving average, this purple line. It was respecting it along the whole way. And now, so we sold a 220. We sold a 220 we saw the 220 strike price right here, the yellow line. And so as long as by Friday it doesn't fall below and close below that yellow line, we should be okay. We can keep our premium. If so, if it's under that 220 on Friday, we'll have to take on these shares, which I kind of don't mind because you see the strong trend on 5 below. But I like I said, I would rather not take on the shares, but on a company like this that has a strong trend, I don't mind. And so one area that I am looking for this week is because it's looking like it's going to break this. Well, it has broken basically the purple line, which is the 50-day moving average, like I said, this is the first time in a long time that it has broke this 50-day moving average with heavy selling pressure, and it didn't recover right away the next day. We do have a small little wick here at the bottom. That's something to pay attention to. This little wick right here. So we're gonna see what it does this week. We still have until Friday, so I think this play can still expire without us having to take on these shares. But on a company like this with a strong trend, they got a new CEO recently who's been turning the company around. So that's what I see on Five Below. And for the other one, like I told you guys, we bought a call on Meta. Right here, we bought a call 5/8, which was Friday, on Meta, for with an $800. This is the strike price, and so in these columns, this first column on the right, this will be my profit and loss once I close it, and this is where I will put my closing date. And these are the price points that I either for the sold puts, this is the price point that I sold them for. For the bought call, this is the price that I bought it for. And always on options contract, you have to move the decimal point over two decimals because when you're buying a options contract or selling the options contract, it's always 100 shares. The option contract is the right. I'm not gonna get into that yet, but it's always for 100 shares. So let's go look what I seen on Meta. So on Meta, I actually let me see. So on Meta, we have a leap on Meta. You seen that expiration date was not until March 19th, 2027. So we have a lot of time on our hands. A couple things. I use a couple websites. First, I'm gonna say this: I use websites to make it simple. It's people who get paid a high number amount of money to analyze companies and watch their earnings calls and do all these things and give a company price target. So I won't get into the what websites I use yet. Hopefully, if you guys stay tuned to the channel, I will drop those for y'all. But I hold a lot of authority to those channels or to those websites on and their price targets. So they still have Meta performing very strongly. And since Meta is a company that I already own individual shares and I believe in the company, anytime a company that I truly believe in and nothing has changed about this business is under this 400-day moving average, the blue line, like I told you, I'm looking to buy in on that company. I'm looking at it like a bargain, like it's on sale. And so Meta has a couple things going for it right now, right? So it has gap down. Usually a stock will fill this gap. Most of the time, stocks fill this gap, and I'll show you what I mean right here. Actually, is a good example. So Meta actually gapped down in this time frame right here, and they didn't do it right away, but eventually it came back and filled this gap right here. You see what I mean? So this is where it gapped down from, and it eventually came back and touched that gap. So usually stocks tend to fill gaps that they create. So that's one thing. And like I said, another thing is that it's behind underneath its 400-day average price it's under its average price from the past 400 days. So if we look historically at this blue line, Meta usually doesn't dip under that blue line too often. It was just one of the times when Mark Zuckerberg was going crazy into oh, did I accidentally what I do with my see, I told you that we're gonna have some technical difficulties sometimes. I accidentally deleted my triple moving averages. Hold on. All I gotta do is go back. Okay, there we go. I did that. So right here, if we follow the blue line, this is one of the times when Meta significantly fell and stay under this 400-day moving average for a significant period of time. But like I said, this is when people was big on NFTs and the metaverse and all that stuff. And it's not as of right now, hey, maybe it might come back and make a return in the future, but as of right now, that wasn't. We seen no real impact from those things. Why does that keep happening? Why does my triple moving average keep going away? I don't like why that's happening. Okay, and then we just if we go back some more, we can see that since Meta's inception all the way back in 2012, anytime that it's fell below this 400-day moving average, it usually recovers significantly fast. So that's one of the things why. Another reason why I didn't mind doing this $800 strike target, strike price on a leap option for a Meta. So let's widen this back up so we can look at the charts a little bit better, look at the price action a little bit better. And so I got in on Friday, and I'm just gonna eyeball this through the week. I'm not in no rush. We got time on our side. And when you're doing leap options, you're going to have to deal with more expensive contracts because you're buying time, and time means safety in the options market. Time is against you when you're buying calls because each each day that goes by, it's a thing called theta, and as your stock price gets closer to expiration, that theta begins to significantly eat away at those option contract prices. So that's why people can day trade and have zero DTEs for a lower price point, and it's going to be extremely volatile. And that's why that's a risky game to play. With us doing a elite option, we have all the way until I'm gonna just show you the space. We have all this space, all the way until March right there for Meta to go ideally towards this direction. We want Meta to do something like it might do something like this, but we want Meta to go up and trend towards this direction. That's what we would like for it to happen. And so, and even we can take a zoomed out view. If we just look at weekly candles, Meta is still trending up. Meta is still trending up. The stock market is never just going to be perfectly straight up. Everything has to reset and rebalance and recalibrate every now and again. So I think this is real cool to get into for the first one. Like I said, I'm not going to overcomplicate it. That's my goal, to not overcomplicate it. I'm here to really document, and hopefully I can help you guys make some money as well along the journey. So if you stay here the whole video, I definitely appreciate you. And hopefully I can catch you on the next video. Stay tuned. We're gonna try to drop every single Sunday. All right. Appreciate y'all.